Unprecedented surge in physical silver demand. The global silver market is experiencing a historic transformation driven by record-breaking physical deliveries on the COMEX exchange and escalating industrial consumption, underscoring silver's evolving role as a critical commodity essential to advanced technologies and national security. Throughout 2025, COMEX has witnessed extraordinary levels of physical silver withdrawals, with reports indicating over 362 million ounces delivered since January alone, far surpassing historical norms and highlighting a sustained demand for tangible metal amid tightening supplies. This surge in deliveries coincides with the U.S. government's formal designation of silver as a critical mineral in November 2025, following a draft proposal in August and finalization under the updated U.S. Geological Survey list. The classification, which adds silver alongside 10 other minerals including copper and silicon, recognizes its indispensable applications in economic and defense sectors, potentially paving the way for enhanced domestic production incentives and strategic stockpiling. Globally, industrial demand has propelled silver consumption to new heights, with the metal's superior conductivity making it irreplaceable in solar photovoltaic panels, where each panel typically requires around 20 grams of silver. A single large-scale 500-megawatt solar farm powering AI data centers can consume approximately 300 metric tons, or roughly 9.6 million ounces, of silver, fueling projections that solar alone could account for over 200 million ounces annually by the late 2020s. The rapid expansion of AI infrastructure has amplified this trend, as hyperscale data centers increasingly rely on vast solar arrays for sustainable power, while electronics and electric vehicle components further drive usage. Major banks and institutions have responded aggressively, with J.P. Morgan Chase reportedly amassing over 750 million ounces in physical holdings by late 2025, reflecting institutional confidence in silver's long-term value amid supply constraints. China's strategic moves have intensified global competition, as the world's second-largest producer continues direct acquisitions of doré and concentrates from top producers Mexico and Peru, often at premiums, bypassing traditional markets and contributing to export restrictions that prioritize domestic refining. Geopolitical developments add another layer, with Vietnam's admission as a BRICS partner country in June 2025, enhancing the bloc's influence over emerging economies and resource strategies. On the monetary front, the Federal Reserve's decision to halt quantitative tightening in December 2025, coupled with signals of potential reserve management purchases starting in January, has eased liquidity concerns while supporting precious metals as hedges against systemic risks. Market metrics reflect this bullish backdrop, with silver prices exceeding $60 per ounce in recent trading and the gold-silver ratio compressing to around 70:1 by early December 2025, down from highs above 100:1 earlier in the year, and signaling silver's relative undervaluation compared to historical averages of 60:75:1. Analysts project continued outperformance, with some forecasting silver reaching $75 or higher as the ratio normalizes, driven by persistent deficits where demand outstrips mine production of approximately 820 to 944 million ounces annually. As physical offtake strains, COMEX inventories and industrial applications, from renewable energy to high-tech military systems, cement silver's status beyond a mere investment. Experts emphasize its role as timeless wealth preservation outside traditional financial systems. With structural shortages looming and elite accumulation evident, the current environment presents a compelling case for silver's enduring significance in a multipolar world increasingly reliant on its unique properties.